Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, the 28th, and hope you all had a wonderful weekend. Our weather here in Southern California is getting a little bit nicer after a little bit of rain last week, including Saturday. So Sunday was a little bit better, a little bit clouds started dissipating a little bit. So let's go on to the economic news here. Enough about Southern California, right? We got the personal income. The biggest thing here, the highlight news is personal or spendable income is kind of, I mean, spendable. I guess spendable income is the best word to describe it. Is down because if you look at income, it's only up about 0.3%. Consumer spending is up 0.7%. And then you get the core PCE. So the core PCE, this is what the Fed really looks at. This is actually a more important index regards to inflation than the CPI number uh, that comes out. And this came in at 0.2%. So this is okay. But if you look at the headline, because this is where it's taking out the food and energy that can be very volatile and created. So the headline number will be much higher than that. Now that's because the short term, the headline PCE number and even the CPI, what we saw before, is higher. So most of our spending is going into a situation where we're spending it on gas and stuff like that and food. You know, prices have gone up quite a bit in those areas. Even though it's short term, but people aren't able to buy what they want, they're kind of allocating that money towards being able to survive with the, going so they can go to work in the morning, so they can have food for their families, these type of things. So it's preventing them from buying other things. So money is being allocated other sources than going out to, which really doesn't help out the economy that much. So this could help slow down for a positive for a little bit, and then maybe once the food and energy kind of stabilize a little bit more, come down a little bit, then people will be able to grow the economy a little bit further. But the economy is showing some signs of growth, which is a good thing. But just keep in mind that right now we're kind of probably going to see kind of a pause a little bit as we are experiencing some high oil prices, as well as which also leads to higher prices when it comes to like food and stuff. Pending home sales, it's up 2.1. So these are basically homes that are in escrow or in process. They haven't closed yet, so they just kind of rolled over to the next month. They're up 2.1%, so not bad. Technicals, the stock market's up right now, not a lot, but up a little bit. Japan, the news coming out of Japan right now is they found highly radioactive water in the sector 2 in the and which is kind of preventing them from being able to stabilize the plant. And then Libya, after NATO came in and did the airstrikes, the rebels are making some headway. Looks like they're kind of getting some more control of the northern cities, which might be able to help with the import-export of oil, basically exporting oil, which, of course, the traders like that as well. Syria, we're starting to see some more violent protests erupting over there, with a few people getting shot. Reports coming out that people are getting shot over there. So again, I think all of us kind of agree that we'd like to see some peace over there, and hopefully people, the hard fought, they're fighting hard for their, we believe to be democracy and some freedoms. We hope, we wish them the best in that adventure. So our thoughts and prayers are out to you folks. Rate watch. Let's take a look here at the bond market as we just saw the stock market. Here's where we are. We had a morning opening gap. I'll tell you what, I kind of like this in the sense that if you look at back around March 8th and 9th, we had an opening gap that came up here, and we never closed it on our trend upwards here. Now, I think this is important because for us to be able to go upwards, we can't have these gaps here. And this morning we had a huge opening gap, which that I didn't like. But as you can see, we're up 22 basis points. I believe we'll cover this gap here. Hopefully get back above 101.80. But the problem is this could create a new low for us. So if we have a bounce to the lower end, this could help make it that transition a little bit lower, a little bit easier. Excuse me. So, but I do think we'll close this gap here. This gap will be closed, so give us a little bit more strength when we make our next move upwards here. All right, folks. So as a result, mortgage rates are worsened today. So obviously, when we see the green, which is going upwards, but because it's lower on the chart here, rates are worsened. So they've actually gone up a little bit than that what we saw on Friday. So, but it looks like they will be coming back here a little bit. Just keep an eye on it. All right, folks. Have a great day. Bye.